Welcome, ladies and gentlemen. Welcome to day 3 in the countdown. Well, it's day 5, day 4. Today is 3 days left with the Bitcoin halving. And if you're following along, we've been counting down the days. Let's go ahead and check in where we're at here. If you're just joining us for this series, John Bush here from Live Free Academy, and we are breaking down Bitcoin, the blockchain, mining, the mining reward, the big halving, and the implications for you. If you follow my work, I keep things practical. I also like to keep things revolutionary. We're all about exiting the matrix and building a better world, not just for ourselves and our families, but also for the future generations to come. And it is my firm belief that cryptocurrency, blockchain technology, decentralized technology, private technology, encrypted technology as a whole will play a fundamental role in the liberation of humankind. Maybe not everyone will go along with us, but at least our community can leverage the opportunities that are there. So let's go ahead and check in where we're at on the halving here. And as you can see, the halving is slated for April 19th. That's coming up in just a couple days. There's 2 days, 6 hours, 49 minutes, and 18 seconds remaining. But as we're doing this, 347 blocks. If you recall, a block gets added to the blockchain approximately every 10 minutes or so. And there's 347 blocks left. The price here is dipping a bit, so we're going to talk about price today. But again, we got 2 days, 6 hours, 48 minutes left, and that is just an estimation, but we can expect the halving to take place on April 19th. That's a Friday, approximately 4:57 p.m. So today is all about price. We're going to talk about the impact that the halving historically has had on price, and maybe we'll make a few guesses as to what could happen in the future. But I want to caution everybody. Let me just set the stage for today's discussion by sharing this. There's 2 paths that you can go down with Bitcoin and cryptocurrency. And those 2 paths are not mutually exclusive. Although I want to caution people, at times they can be at odds. The 2 paths are leveraging cryptocurrency for A, protecting wealth or building and growing wealth, and B, as a revolutionary means to continue to do business with other freedom lovers as the central bank digital currency system gets erected around us. Okay? 2 different paths. Path A, wealth, preserving wealth, growing wealth. Path B, using cryptocurrency as freedom money. Originally in the space, it was the same path, and it was more so freedom money. Things have changed, they've shifted. I covered this briefly yesterday when we talked about Bitcoin. Is it a store of value or a medium of exchange? Is it a digital gold or a digital cash? So we're going to talk largely today about Bitcoin and the opportunity it presents to protect wealth, as in you've worked your butt off, maybe you're older, you're retired, you've managed to establish a nest egg, and now you're concerned that the currency, the United States dollar, the Canadian dollar, the euro, whatever it may be, is being inflated arbitrarily in order to pay for foreign wars of aggression, in order to finance government programs, and in order to service the debt of all of these total fugazi, house of cards, BS financial systems. It's a total fraud, and cryptocurrency offers us an escape. So that's what I mean when I say protecting wealth, protecting it from inflation, but also growing wealth. Because look, let's face it, there's tons of upside potential when it comes to Bitcoin, okay? But that's not everything. We also need to ensure that we are setting the stage for our children, for future generations. For us in the present moment, the next few years are going to be crazy style with the amount of financial control. So if you work with me at Live Free Academy, if you join us in the membership, we'll be sharing more about it tomorrow and Friday. You can rest assured that I'll be laying out really practical, principle-based strategies that you can use in order to build and protect wealth, but also in order to do some freedom stuff at the same time. It's this cool nexus that we're on. Regardless, let's talk about Bitcoin's halving and the impact it will have on the price and the impact it'll have on you, the likely impact, I should say. If you're just joining us, of course, for this series, we have been breaking down what exactly the halving reward means and what it looks like. So just a quick little image here. Every approximately 4 years, the number of new Bitcoin that are generated with each block. The block is a collection of transactions that takes place in the Bitcoin network. It gets added to the blockchain approximately every 10 minutes. The blockchain is just a chain of these blocks. It's just digital information about transactions and who sent what address sent what Bitcoin to what new address, right? Well, when we started off with Bitcoin, the block reward, the new Bitcoin created every approximately 10 minutes, was about 50. Then in around 4 years, it got cut to 25. Then it got cut to 12.5 around 2016, 2020, 6.25. And what we're coming up on is 3.125 new Bitcoin being created every approximately 10 minutes, right? And of course, as we shared yesterday, I don't have that chart in front of me. Let me pull it up once again. Maybe I had a link to it here. As we shared yesterday, this is all about Bitcoin's expected rate of inflation. That's why the halving takes place. Unlike fiat currencies, unlike the dollar, which is just inflating left and right, we have an expected inflation rate with Bitcoin. That's exactly what the halving is. The new Bitcoin created, the new inflation. Sometimes when people talk about inflation, sorry guys, I thought you were there with me. Sometimes when people talk about inflation, they think it means prices rising. In all reality, what inflation truly is an increase in the money supply. The more supply you have of something, the less it tends to be worth. The same is true with money. So Bitcoin has an inflation rate, although it's not just willy-nilly pumping money, but there is an expected rate of the money supply to increase. And that expected rate of inflation looks a little something like this. Okay? So as you can see, we covered this yesterday. I'm just doing a quick recap, and we're going to break it down what this means to the money price, to the price of Bitcoin. So this red line is the inflation rate. That's all the new Bitcoin that get created. And as you can see, every approximately 4 years, it gets cut in half. Right? This is the new Bitcoin that are in existence in circulation. And as you can see here, there's a increase in the supply all the way going to the year 2140. Continues on the chart. We don't see it, where it's just going to be just smaller amounts, and not too long it'll be less than a Bitcoin created. So if you have a whole Bitcoin, you'll have more than the number of Bitcoin created with every block, which is pretty cool. It's a great goal to get yourself a whole Bitcoin. So that's what the halving is. That's why the halving exists, so we can have an expected rate of inflation. Now, what does all this mean? Well, first let's paint a picture. There's a couple big things that are happening at the same time that lead me to believe there is going to be a dramatic increase in the price of Bitcoin after the halving. Maybe not immediately, but very likely we will enter a pretty serious bull run, okay? Now, first, let's just talk about historically what's been happening here when it comes to the halving, okay? Historically, what has been going on? So this is a chart. There's a lot of cool stuff on Twitter when it comes to Bitcoin. So if you're not on Twitter and you're interested in cryptocurrency, you do have to cut through some noise, I should say. But I encourage you to check this out here. So let me just center this. This is fine. We'll just roll with this. So check it out. What we're looking at here is the years. I don't know why this year repeats. This must have been a mistake here. But as we can see, there's these cycles where, and again, there's a 4-year cycle when it comes to Bitcoin. 4 years corresponding with the halving. Okay, so now we're going to get into the economics of what happens with the halving historically. And as I shared before, a general principle of trading is that past performance is a good indicator of future performance, but it's no guarantee. Okay? So as we can see here on this cool little image, 2011 was a bear market. That's when the price goes down. Okay. 2012 is a minor. This is what's a consolidation period. That's when the price is kind of trading sideways. There's an equal amount of buyers as there are sellers. Then the price tends to heat up into a light bull run, and then it goes into a very substantial, crazy bull run. Okay, and then it repeats. Then the halving takes place. This is right before the halving. Then the halving takes place. I'm sorry. This is when the halving takes place. The halving takes place in this era here. in this year, 2012. So there's a giant bull run leading up. There's a big bull run leading up to the halving. The halving takes place, and then the price goes gangbusters. But then it cools down, and there's a correction, and we enter a bear period, okay? Then the following year, we see consolidation, and then leading up to the halving, we see a minor bull market. The price is going up, and then after the halving, boom, the price skyrockets. And then again, 2018, same thing, okay? So here we are in 2024. Now some time has passed a little bit here, but we should anticipate the price to do what it did these previous halving years, go up. And then in 2025, if past performance is a good indicator, we'll see the second bull run, which tends to be bigger. Okay? That's just what's happened historically. And who knows exactly how high the price will go. It remains to be seen. There are some other factors at play here that I want to discuss with you that are really, I think, going to have a big impact on the price. And I think they're definitely worth examining without a doubt. There's going to be some crazy action going on here. And I think that we can expect some wild times in regards to the price. But I do want to have people to be cautious. You really never know, because there's this thing with Bitcoin, the government, there's still folks sorting stuff out. The government's still trying to wrap their heads around how they're going to regulate it. And a new law could pass, a new bill gets introduced, and everything basically changes. So it's just something to be aware of, right? It's still the case, even though Bitcoin is becoming more and more mainstream and established, it's still the case that you should not invest more than you are willing to lose. Okay, it's still the case. You shouldn't invest more than you're willing to lose. Okay, so check this out. The thing that's unique about this halving, this epoch as they're called, that's the 4-year periods, is we now have this Bitcoin ETF, an exchange traded fund. That is where Wall Street and investment firms, they are able to now sell basically a paper version of Bitcoin that's a security. It's regulated. It can be traded. It also can be part of a retirement account. So there's all this money that's been locked up because of this IRS scheme to incentivize people to invest in Wall Street. And that money is now capable of being deployed into the Bitcoin space. And so when one of these firms like BlackRock sells an ETF, and the customers that go to their fund manager now at the local credit union, their financial advisor, whereas before the financial advisor didn't have an opportunity to make a fee and earn money by encouraging you to invest in Bitcoin, they were more than likely to say you should avoid it. It's too speculative. But now you may find, and this may ring true to some of you that are watching right now that the financial advisors have the ability to earn a fee on selling you a Bitcoin ETF, many of them are now turning the tide and now recommending Bitcoin because they can make money. It's just all natural incentives. It's just human nature. It is what it is, but let us be aware of it. But now there's all this tied up money that's been captured by these retirement accounts, also captured by pension funds, for example, and teachers' retirement accounts and police union retirement accounts and funds. And that money is now capable of being invested in Bitcoin. When BlackRock sells an ETF, they then go and buy an equal amount of the actual cryptocurrency Bitcoin, and then they go hold it with a custodian. Almost all of it's tied up with Coinbase, which is a vulnerability to have all of that stuff with all these different exchanges, with all these different financial institutions, BlackRock, VanEck, all of them having crypto with one custodian. That's a point of failure. Who knows what could happen there? Something to be aware of, all sorts of stuff to be aware of. So we're experiencing a supply shock because at the same time that there's a very, very high demand for Bitcoin purchasing, because now all these new players are entering the space, we find that the amount of available Bitcoin to sell is at some historical lows. Okay? So what we're looking at here is the number of Bitcoin that are sitting on exchanges, meaning the number of Bitcoin that are available to sell. So again, there's about 18 million plus Bitcoin in circulation now. The remaining less than 3 million are yet to be mined. And as we can see, this is back from February, it looks like, but the trend has continued. as we can see, there is very little Bitcoin available on exchanges to sell. Okay? This has led to a supply shock. So this is a quote from James Butterfield. He's the head of CoinShares Research. He's the head of research at CoinShares. It says, while 900 Bitcoins are produced daily, the newly issued U.S. ETFs are demanding 2,800 Bitcoins per day. That number's gone down a little bit. Things have cooled since the price isn't pushing all-time highs at this moment. But nonetheless, this is still the case. This has led to a 28% reduction in exchange holdings since 2020, indicating a market experiencing a significant demand shock. Now look at that number 900. That number is about to get cut in half because of the halving. So again, to recap, at the same time that we have crazy demand from the ETFs, we are also experiencing very low supply available on exchanges. And on top of that, we are experiencing the halving. Huge demand, diminishing, less available supply. What happens then? Prices go up. Now let me just share something. Sometimes I just take for granted how prices work. I've been studying Austrian economics and all sorts of stuff for a while, but I recognize there's some people, because this question springs up, how does Bitcoin get its price? Well, to answer that question, we can answer how anything gets its price. Let me just do a quick economics lesson because it'll help you to fully understand exactly what's going on here, this whole supply and demand phenomenon, okay? So check it out. CoinGecko is a website that I like to use, and I'll share this there in the show notes, coingecko.com. It has a list of all the different cryptocurrencies, their market caps. Market cap is the number of units in circulation times the price of each unit, okay? It has the number, and as you can see, the price is going crazy. We're going to talk about some stuff going on with the chart right now. But it has been selling off, but there's other things to be aware of that could push it back up. But it has all the different cryptocurrencies, all the market caps, how they rank against one another, okay? Now check this out. Here's Bitcoin right now. So this is a chart. It's a 1 hour chart. Each one of these candlesticks represents an hour period. If the candlestick is green, it means at the beginning of that hour, the price was at the bottom of the candlestick, around 65,878. The top of that hour, the price was at the top of the candlestick. It means during that hour, the price went up. If the candlestick is red, it means during that hour, the price went down. Started off at 67,117 approximately and went down to 64,000. These wicks, these little lines, that's during the period. That's what the price did. During that hour, it went so high as here and went so low as here. But it started here and ended here if it's red, okay? Now, let's pull back a little bit. Let's see a daily chart. Wow, this is crazy. So let me show you what happens with price here and what drives markets. It's all about supply and demand. Here's the general rule of thumb. The price goes up when there's more people that want to buy something than there are that want to sell something. Essentially what's happening here is the buyers are competing with one another to do business with the sellers. More buyers competing to do business with the sellers. So it looks like this. Man, I really want to buy Bitcoin. I'd love to buy Bitcoin at 62,000. And this guy's like, hey, I'll sell you Bitcoin at 62,000. But then this other guy's like, no. I want that Bitcoin. There's not a lot available right now. There's a lower supply. There's fewer sellers. I'll buy it for 62,100. Oh, sure. I'll sell it to you for 62,000. No. Wait. Excuse me. I'll buy it for 62,500. 62,500 sold. The price goes up. And this is just happening in mass all across the world with Bitcoin all the time. The markets never close. When there's more people wanting to buy, they compete with one another by increasing their bid, and they are competing to do business with the sellers, okay? I'll buy for this, no, I'll buy for this, sold, and it's going up. That's when prices go up. So that's what we see happening here. When the price goes up from 50,000 all the way up, boom, during this day, went all the way up to 55,000. That's a 10% increase, and it kept on going up these 3 days. There were more people buying than there were selling, and the price went up. Now we see blood or red when there's more people selling. I want to sell. Well, there's not a lot of people buying. Okay, well, I want to sell so bad. And this person's like, well, I'll buy it for $66,000. And the other person's like, no, I'll buy it for $65,000. I'll sell it to you, right? Prices go up when there's more people buying than there are selling. Prices go down when there's more people selling than there are buying. And that's exactly what happens here. Okay, so wisdom would show us that coming up, right? So we got a bunch of people buying. People are buying. We have the ETFs. We have people anticipating the halving. And at the same time, there's a set number of people selling, or a set number of Bitcoin available to sell, fewer on exchanges. The new Bitcoin that are being created is about to get cut in half. So even if the demand stays the same or goes up or goes down sometimes, the new Bitcoin available that usually gets sold to these big players or exchanges is going to be cut in half. So from that, we can anticipate the prices should go up. But in the short-term moment, as I'm sharing this, there's some things that we could read from this chart here. Okay, let me just share this picture. And again, past performance is a good indicator of future performance, but it's not a guarantee. And, I want to encourage folks. Many of you have already done workshops with me and are part of the community, but just want to encourage you or give you some words of wisdom. I'll always shoot you straight. I'm not one of these YouTube videos. If you go search Bitcoin price or whatever on YouTube, there's all these like crazy thumbnails and they're like, exploding price, you're not going to believe it. And there's all these other cryptocurrency casino coins that they're trying to get rich off of. And the video's like, oh my God, we're expecting a 1,000% gain, blah, blah, blah. That's not me. I'm a long-term conservative plays, practical plays. I follow Warren Buffett's rules of investing. Anybody know him? Rule number 1, don't lose money. Rule number 2, follow rule number 1, right? And that's why there's a buying strategy I'll talk more about tomorrow that I think is really important. I'll go ahead and tell you what it is. Dollar cost averaging. Instead of trying to time the market, let's wait till the price goes down, then we're going to buy. Do you think it's going to go lower? When the price goes up, I always get the messages from friends and high school friends even. Do you think now's a good time to buy, John? You know what I tell them every single time? I don't know, and I don't think you're going to be able to figure it out either. Why don't you just buy a set amount every so often? Me personally, I buy $8 a day right now, every single day at 11 a.m. Maybe somebody has higher means, they can buy $500 a month on the 15th of every month, $2,000 a month on the 15th of every month. Now your position is spread out over the ups and downs, doing away with the volatility and the risk. And over time, when you look at the chart, it is going upwards. I do believe Bitcoin is going to continue to be a global phenomenon. If I were a betting man, which I am, and I'm betting on Bitcoin, I do believe that Bitcoin will be held on the balance sheet of banks and perhaps even central banks, just like gold was. Now we have digital gold, okay? It's already one of the most valuable assets on the planet. It's brand new, and there's no company running it. It's pretty wild what's going on. But let me just show you this chart here, because there's this thing called technical analysis. And again, it's no guarantee either, but we are seeing, this is what Lawrence the Fuzzy Rebel actually shared in our cryptocurrency community group on Telegram that is available for folks that do crypto workshops with me. But see this M here? We have a big M actually. One M, the second hoop of the M, but then there's a smaller one here. There's a double top, it's called, and that is usually a bearish sign. Bearish is in the price going down. You can kind of see one here, double top, but it's not flat equal. Okay, guys, so maybe the price goes down. Maybe there's another principle that's called buy the rumor, sell the news. So maybe the price of the halving, the price increase that's expected with the halving because of the supply shock, maybe that's already caked in right now. Everyone was anticipating it. We know when it's coming. It's coming sometime late April. We know it's going to happen. Let's buy. The price is going to go up. And then people sell whenever that happens. The people that bought earlier. Buy the rumor, sell the news. It's always good to be at the beginning of that cycle. So, which is why I've been telling people about the cycle for years now. I've been telling people to buy Bitcoin for years now, and the price has been way, way, way low. I do want to share, though, don't find yourself in a position where you're like, oh, the Bitcoin's too expensive now. It's 60,000. I should have bought when it was 12,000 or 30 or 40,000. Because fast forward a year or two, Bitcoin likely will be 120,000, and you'll be like, damn, I should have bought when I watched that video from John when it was 60,000. But the thing to do isn't like, I'm going to go all in right now because I think it's going to be up in the future and everybody's talking about it. No, the thing is to buy a set amount every X period. A week, every 2 weeks, every month, every day, every 2 days, whatever it is. So, yeah, those are some things to be aware of. So I know I'm going to shoot you straight, okay? I don't know exactly what's going to happen to the price on the short term, as in what happens on the 20th and after that, but I do know, I feel confident, I should say, that long term, for the rest of the year especially, the price should be shooting up substantially. And dollar cost averaging is the way to get involved. Now, I do want to share, things are constantly changing. There is new information that's always being brought forward. There's changes in Bitcoin, there's changes in cryptocurrency in the space, and it's something that I have become obsessed with for years now. And I just want to encourage people to join us tomorrow for our live stream. I'll be sharing more about the new membership that we're going to be launching. Membership has been closed for the past year or so. We do have a bunch of members that have been rolling with us as we evolve this membership. But I do want to remind you, as I started off, 2 tracks. I want to encourage people not to lean so heavily into the get rich, number go up, wealthy track. I totally get it. If somebody has wealth, they want to protect it and preserve it from inflation. I get it. I'm with you. And I'm no stranger. I want to build wealth too for my family and pass it on to the kids and all that stuff. That's part of my game here. But let's not let this path overshadow the real work that we're on this earth to do, which is to overcome this beast system that's being erected all around us, to push through the resistance and create a free world for our future generations to enjoy. I don't want future generations to be born with a digital ID, not able to access the internet. They're all chipped up and tracked and traced. They got a carbon credit, social credit score. They're using CBDCs. They can't even enter into the economy unless they've done this, and they're all chipped and tracked. That's what the Great Reset, that's what Klaus Schwab, Bill Gates, all these clowns want for the future. I want you to remember there is a revolutionary aspect of cryptocurrency. Things have shifted, the narratives have changed, but it hasn't changed for me, and I hope it hasn't changed for you. So if you roll with us at Live Free Academy, you can join our daily email newsletter, livefree.academy/email, livefree.academy/email, and you can rest assured we are no strangers to the idea of building wealth, entrepreneurship. I'm a big fan of money and what money allows me to do in my life. Take the kids on vacation to the water park, buy a 10-acre homestead, do nice things for my family, right? But that's not the be-all, end-all, folks. The be-all, end-all is what can we do to create greater freedom in our lives, greater freedom, privacy, bodily autonomy, and what kind of legacy of liberty can we leave to the future generations. So if you join us at Live Free Academy, you're going to get the best of both worlds. All right, folks, this has been day 3. There's 2 days left in our countdown. Tomorrow, we're going to be going more in-depth. We are going to share how to take advantage of the opportunities that Bitcoin presents for us. We're going to talk about the potential for Bitcoin as a global reserve asset. Where is this going? And I'm going to tell you some trends that I'm seeing. I'm getting pushback even from some of my friends that normally we see eye to eye on 99% of things, but there's some concerns that I have with people's ability to actually use Bitcoin if the fees continue to get higher. It's one of the reasons why I talked about yesterday, store of value or medium of exchange, digital gold or digital cash, price going up, small blocks, high fees. You got to play your cards right when you get involved in this game, because if you buy small amounts repeatedly, small amounts into your wallet repeatedly, you're withdrawing from your exchange account repeatedly, you could find yourself in a tough spot where you can't spend that Bitcoin because the fees are higher than the amount of Bitcoin that you have. We're going to talk about unspent transaction outputs and navigating this ever-changing space. What does the future hold for Bitcoin, in my view, in my prediction, and how can we prepare ourselves? How can we leverage it? How can we navigate around it? How can we make sure that we don't find ourselves in trouble? And I'll be sharing more about the Live Free Academy membership. I've come to realize that I'm not serving my clients at the highest level by doing these one-off workshops. You take the workshop I did back in 2021, things have changed since then. Even the workshop I did a year or two ago, things have changed substantially. So I'm launching this new membership so you can stay in touch with me, and so I can constantly be giving you the guidance, the hand-holding needed to make sure that you are taking advantage of everything cryptocurrency has to offer, and staying free as you do it. All right, ladies and gentlemen, this has been John Bush. Day 3. We got 2 more days to go in this series. I hope that you'll join us tomorrow. Until then, stay free, friends. Peace.